Welcome to Kharoo channel. We are solving the sums of depreciation as per straight line method, and in this video we are going to solve practical problem 6, that is on page number 245. Let's go through question 6. Samarth Manufacturing Company Limited, Aurangabad purchased a new machinery for rupees 45,000 on 1st Jan 2015 and immediately spent rupees 5,000 on its fixation. So on 1st Jan 2015, they purchased machinery 1 for 45,000 and have spent 5,000 on fixation. As per accounting standard 10, we add all the expenses that are required for machine, we add it to the cost of acquisition. So the total cost of acquisition will be 50,000. We will calculate depreciation on 50,000. Then in the same year, 1st July, additional machinery costing rupees 25,000 was purchased. So 1st July 2015, additional machinery means one more machine was purchased for 25,000. Correct? Then on 1st July 2016, the machinery purchased on 1st Jan 2015, that is first machinery, became obsolete. Obsolete means became outdated and was sold for rupees 40,000. So 1st July 16, machinery, which machinery? First machinery. Machinery 1 was sold for 40,000. These transactions were of purchase. This one is of sales. So transactions are over. What is next? Depreciation was provided for annually on 31st March at the rate of 10% per annum on fixed installment method. Fixed installment method means straight line method at the rate 10% per annum. You are required to prepare machinery account for the year 14-15, 15-16 and 16-17. So in 14-15, what were the transactions? 14-15, this is 15-16. In 15-16, machinery 2 was purchased. Till March 16, nothing is there. This is in 16-17. So with this summary, let's start the working. So working note 1, calculation of depreciation. This is as per SLM method at the rate 10% rate. So we will need particulars. We have two machinery, right? So M1 and M2, and at the end total depreciation. We will need purchase date and purchase amount. So let's put in the purchase details. On 1st January 2015, first machinery was purchased 1/1/2015 for 50,000. For 50,000. And in second year on 1st July 2015 for 25,000. 1st July 2015 for 25,000. So let's start with depreciation. Depreciation for FY 14-15. First machinery was used for 3 months only, Jan, Feb and March. So the calculation will be 50,000 into 10% into 3 divided by 12. And the second machinery was not yet purchased, so there will not be any depreciation on it in first year 14-15. Let's do the working. 50,000 into 10 divided by 100 into 3 divided by 12. 1250. 1250. And 1250 will be deducted from 50,000. We will get 48,750. 48,750. So that will be the WDV at the end of first year. 31,315. So with this, first year depreciation working is done. Total depreciation will be 1250. In second year, second machinery was purchased in between the year. So there will be working 25,000 into 10%, and it was purchased in July. So from July, August, September, October, November, December, Jan, Feb, March, that is for 9 months the machinery was with business. So 9 divided by 12, let's do the working. 25,000 into 10% will be 2,500 into 9 divided by 12, that will be 1875. 1875 will be deducted from 25,000 minus 25,000, it will be 23,125. 23,125 less depreciation for financial year 15-16 and WDV as on 31/3/16. And first machinery was used for whole year in this second year. So the depreciation amount will be 50,000 into 10%, that is 5,000. 48 minus 5 will be 43,750. And now in third year. In third year, what happened? On 1st July 2016, we sold off this first machinery. Which one? This one. This one. So less depreciation for financial year 16-17. And this year, this machinery was used for only 3 months. 50,000 into 10% into, it was sold on 1st July 2016. So for April, May and June it was used. It was in the business. So the amount will be same, 1250. And second machinery was used for whole year. So the depreciation will be 25,000 into 10%, that is 2,500. So with this, we can calculate WDVs. 43,750 minus 1250 is 42,500. 42,500. 23,125 minus 2,500 is 20,625. Let's do the other horizontal totals. The WDV will be here 48,750. Depreciation will be 5,000 plus 1,875, 6,875. Then this WDV will be 43,750 plus 23,125, that is 66,875. And 1250 plus 2,500, 2,500, this will be 3,750, right? And as this machinery is sold, we won't include this amount in our WDV, because at the year end this machinery will not be included in the WDV value. So here we will take the total of second machinery only, 625. WDV as on 31/3/17. For machinery 1, 20,625 WDV is as on 31st March 2017. However, for first machinery which will be sold, that will be on the date of sale, right? On 1st July. So this WDV will be as on 1st July 2016. Correct? With this WDV, now we can find out what is the profit or loss from selling this machine. So we will make working note to profit or loss on sale of machinery. Machine 1 is sold. How we will calculate sale amount? What is the sale amount? Sale amount is 40,000, right? 40,000. From that we will reduce the WDV as on sale, as on the date of sale, that is on 1st July 16. At that time, what was the WDV? 42,500 was the WDV. So that is, we got a loss of 2,500. from selling the asset. This was the book value and we have not been able to recover even that value from its sale. We have received less amount from sale, that is 40,000. So the loss on sale of machinery 1 is 2,500. With this, our working note 1 and working note 2 is ready and we can open our machinery account. So let's open machinery account. And we will start with machinery 1. Machinery 1 was purchased on 1st Jan for 50,000. On 1st Jan 2015, machinery account debit to bank account. We paid through bank. The amount is 50,000. Then during this year, there are no other purchase or sale transactions, so we can directly go to the depreciation entry, that is 1250. So on the last day, 31/3/15, we'll pass depreciation entry by depreciation account 1250. So all the entries are done. We can close our books. 50,000, 50,000. They've asked only machinery account, depreciation account they have not asked. So the balancing figure will be 48,750. Buy balance closed down, and next day we will carry that amount forward. 1st April 15 to balance brought down 48,750. With this, our first year is done. In second year, another machinery was purchased on 1st July 2015. So we'll first pass that entry. On 1st July 15, we paid through bank. Machinery account debit. This is machinery account debit to bank account. The amount is 25,000. So the entry of 25,000 is done. And now no purchase or sale entries are pending. We can directly pass the depreciation entry at the year end. So at the year end, that is 31st March 16, by depreciation account 6875. So this entry is passed. There are no other entries. We can close the books. This total will be 750. 8 plus 5 is 13 and 73. 48,750 plus 25,000 minus 6875. The balancing figure is 66,875. 66,875. So the balancing figure by balance closed down is 66,875, and we will carry this amount forward in the next year, 1st April 2016, to balance brought down 66,875, and this amount tallies with our working. So second year entries are done. Now in third year, there is one sale entry. Sale is done on 1st July 2016 and depreciation on it is 1250. So first we'll pass depreciation entry on the asset that was sold, and it was sold on 1st July 16. So by depreciation, amount is 1250, and now we will pass the sale entry. What is the sale entry? We have received 40,000, so we will give effect to bank account. We have received funds in bank, debit the receiver, with that we'll debit the bank account. And since the asset is going out of the business, we will credit the machinery account. What goes out, that is the rule. And we have got a loss of 2,500. So we will debit the losses, right? So loss account will be debited. So we have to credit machinery account, and to give the credit effect of 42,500, we have two debits of 40,000 and 2,500 from bank and loss. So the posting will be by bank account 40,000 and by loss on sale of asset 2,500. So with this, sale entry is done. Now at the year end, we have one machinery left with us, machinery 2, and we have depreciation on it 2,500. That entry we have to post. So on 31st March 17, by depreciation 2500. So with this, all the entries of third year are done. We can close our books. 66,875. Let's use the calci. 66,875 minus 1250 minus 40,000 minus 2,500 minus 2,500. The amount is 20,625. 20,625 on last day by balance closed down. So we will carry that amount forward in the next day on 1st April 2017 to balance brought down 20,625, and this amount matches with our working 20,625. So what we did in this sum, we started with working note 1, that is calculation of depreciation, and we got the WDV as on date of sale. With that we found out what was the profit or loss from sale of asset machinery 1. We got a loss, and with these two working we did the posting in machinery account for 3 years. This is your sum 6 from your textbook exercise. That's it. If you find this video useful, please like the video, share it with your friends and subscribe for future notifications.